Hello traders, Douglas here. Today is going to be a quick one. I'm going to cover something that I've noticed on the DxFeed from Bookmap. Now the DxFeed is for stocks and I use it to track the ETFs that coincide with the futures. So QQQ is NQ, SPY is ES, IWM is RTY. And they give you sometimes more insight into what's going on with liquidity than the futures do. So just for an example, if we're on the SPY here, you can see various levels of liquidity or interest where people want to trade. You know, these are resting orders waiting in the book to trade. And then if you come over to the ES, it's not as clear, okay? And ignore all this stuff that just popped up here, but we're looking at these liquidity levels. You know, it's not always as highlighted as you can get in the ETFs. Now, what we're looking at specifically is what I'm going to call algo levels or algorithmic levels. I don't know that that's exactly what they are, but I don't know how to explain what these could be any other way and how they can help you sort of figure out where might be a real resistance zone versus a theoretical resistance zone that might not hold up once price gets there. All right, so when we start out with the SPYs, what I want you to pay attention to is these lines. All right, now they're all pretty much evenly spaced, okay? And then right here, they all adjust all at the same time, all with the same even spacing, and then they adjust again, all at the same time, all with the same even spacing. So that is not a human. That is some sort of program working here. And what you'll notice down here is this line doesn't adjust. And this is where price comes down and gets hung up and starts working up a little bit higher before the close of the day. And something else you'll see with these levels is much of the time when price starts getting next to them, like right here, you'll see this gap. Right, so they weren't really trying to trade that, okay? Because as soon as price comes up to it, it disappears. But down here, and I think we can even zoom in, price stays put. You know, it doesn't adjust with all these other levels. And when price comes down to it, it doesn't disappear. You can see this level down here. When price comes down, that level disappears, that level disappears. So again, this level wasn't serious about trading in that zone, but this level certainly was, and that it ends up acting as an actual resistance zone and holding price up and potentially reversing it, although the day cut it off, so we don't know what would have happened. So let's go over to QQQ. We're not going to look at IWM. It's a little more of a mess. Certain days it will show up like this. Other days it's much harder to read. But QQQs and SPYs are usually pretty clear as far as where these different levels are. So you can see in the Qs, you know, all these levels evenly spaced out. They all adjust at the same time. They all adjust at the same time. All adjust at the same time. But this bad boy down here does not. He's sitting there, he's hanging out, doesn't care what these other levels are doing. This is somebody that's actually serious about trading. Price comes down once, gets really close to it, you know, rejects, goes up, comes back down, tests it out again, actually trades through it. All right, so there's actual trades that transacted here off of this liquidity. And then price dips a little bit below it, but essentially it acts as a resistance zone and price starts working its way back up. So I just wanted to show you that today. That's something I've been noticing lately, something I've been watching very closely. I find it very interesting and quite fascinating. And so if you match up, you know, maybe what's going on over here in the Qs and the SPYs with what's going on the ES and the NQ, it might give you an edge. That's it for me today, traders. Peace out.